Hey everyone, thanks for having us here. We're excited to talk to you about the future of custody, and we've got Michael Shaulov here, the CEO of Fireblocks. Maybe quickly on myself, I'm an investor at Ribbit Capital. We invest at the intersection of finance and software, and we've been blessed to be investors in Fireblocks over the past few years. We think every business in the world over time will touch crypto, and Fireblocks is well positioned to service them. So I'm excited to introduce Michael here, and I'll let him tell you guys about himself.
Zach, thanks for first of all, thanks for having me here, and thanks for being our investors and supporters in Fireblocks. By the way, also thanks for SCB for being on the same train. Maybe just a quick introduction about myself. So I'm Michael. I'm the CEO and co-founder. We started Fireblocks about 5 years ago. Before that, I've been in the cybersecurity space actually for almost 2 decades. And what we do in Fireblocks, we basically provide a platform that is delivering a custody technology. So basically, the entire stack of wallet infrastructure for institutions, the compliance and the policy and the workflow layers to do it in a secure and safe and sound way. And on top of that, we basically solve a lot of the issues around settlements across public and public blockchains, right? So how do you interact with counterparties? How do you send them funds without exposing yourself to counterparty risk, to hacks, to user errors? And I think where we were also heavily investing on top of those two layers in the last 2 years or so is around all the access into Web3 capabilities around NFTs, tokenizations, and so on.
And Michael, you're operating in such a fast-moving space. Obviously, a lot's changed, over the past 3 months, 6 months, a year. What's changed in terms of your customers and what they're asking for? How is the institutional space changing?
Yeah. So I think that over the last 12 months or so, clearly we've seen a lot of compression in some of the original crypto trading space, right? Still a fairly active space around offering access to cryptos and trading and brokerage, both on the institutional side and on the retail side. But that compression, interesting enough, was compensated by a rapid growth in two main areas. The first area is really around Web3. So we are seeing a lot of both startups and big brands coming in and building products that are leveraging NFTs to fundamentally change the experiences that are available on the internet, right? Through NFTs and the ability to create ownership on IP and new experiences of how do you interact with brands, with virtual goods, and so on. So that's kind of one area that we've seen expanding in terms of client base and people that are coming with slightly different requirements from an infrastructure standpoint. And the second area is really around more aggressive pursuit from financial institutions. So I would say this is actually what you see mostly outside of the US. So APAC, LATAM, Europe, now under MiCA, you see a lot of the banks, payment providers, and core financial market participants from the traditional space coming in to use digital assets. And mostly what they're interested in is in use cases around tokenization of financial products. So that can be stable coins, tokenized deposits, securities, tokenized money market funds. We see some of these things propagate into the kind of broader renewable energy space, carbon credits, green bonds, and so on. So this two groups are essentially from a demographic standpoint, have been shifting, I think, our specific customer base over the last 12 months. And also, they do put new requirements, right, on the stack and what do you do as a custody provider. So the first thing is really kind of related to the broader demographies around reduction of counterparty risk. This specifically came post FTX and Celsius and some of those things where direct custody and self-custody became very interesting and important narratives. So Fireblocks has always been a provider of direct custody, and we also have capabilities in the basically extending self-custody to the end users. So those are things that are in high demand. And for the Web3 and the financial services today, I think that a lot of what has changed is really the ability to interact with programmable assets, right? So to both issue, whether it's NFTs or stable coins, is an important capability. And generally speaking, how do you interact with smart contracts, and how do you do it in a secure way? And that's all eventually comes back to the custody aspect.
And maybe just staying on the topic of the banks and the financial services firms, what are, you talked about some of the pain points and challenges. What are the, how would you describe the challenges they have with entering the market? What are the major blockers for them? And then how is Fireblocks, you talked about some of the differentiating points, but how do you guys differentiate across the various the various options they have when entering crypto?
Yeah. So it's a really good question. I mean, I think that the main, I think that there are basically two challenges, right? The first challenge is really the business challenge of how do you underwrite the investment, and how do you create a go-to-market, and how do you create the products that will be able to create or even like business models, right? And that are relevant to transforming a regular financial institution into a blockchain-based financial institution. And the other aspect is really on the technology side of how do you take institutions that they had a technology stack that is very much catered into, excuse me for potentially over exaggerating, but technology that sometimes have been developed in the 70s, 80s, or 90s, right? How do you fast forward them into technology that is able to be relevant for competing with fintechs, right? Which is cloud-based, transactional, continuous integration, continuous deployment technology, and the ability to basically cope with the fast and rapid changes on the blockchain space, right? So, the way that I think Fireblocks is addressing both of those challenges, broadly speaking, is that honestly, we do start with kind of creating the technology that first and foremost supports the business, right? And what we've basically structured is both from a business standpoint, we have a very strong team that is doing business advisory, right? So we have people that are able to work with middle and senior management of the banks, get them educated, show them a bunch of basically success stories of other institutions that engage in the space, what have they done, and basically help them to build a business case that can actually work in production and not a theoretical one. And this is usually based on the fact that we have 1,600 clients, right, that we work with. So we know what works and what doesn't work, right? So this is kind of like intelligence and assistance to create the business case. And then on top of that, clearly, the technology that we developed allows those banks to go fairly quickly into proof of value, right? So you can basically use Fireblocks technology in a very seamless deployment that literally, we have quite a lot of examples with, Bank of New York Mellon, ANZ Bank, National Australian Bank, ABN AMRO, and so on, that we literally took those companies from zero to having a production product in 3 months, which is a record for speed record, right, for financial institutions, and with an investment that is fairly minimal. And then there is a very direct path to continue and implement it in a full production, and that's really on the technology heavy side, where Fireblocks is the platform of choice in terms of the configurability, the regulation, the amount of certification, the ability to implement components that integrate with the bank, and that basically sort of like covers their full life cycle of helping them to underwrite the business case, proving that the business case works, and taking it to a full production under an environment that can meet regulatory requirements from those institutions.
Super helpful. And when operating in a space with so much noise all the time, you've got regulators talking about scams and all the risk in the space and kind of where's the money coming from. How do you approach that with banks and large financial institutions? What advice do you give to them when they're thinking about entering, but you've got a risk committee and all of that? Like, how does Fireblocks think about risk and security and these different aspects to help move that along?
Yeah, so we invested a lot in the infrastructure of helping banks to go through all those non-trivial hoops with new technology. So first and foremost, we both invested in technology that is really configurable in a way that you can prove that you implemented all the controls, both from internal governance, policies, in terms of, just like, to make it very simple, if you need to remit an asset, you have a network that basically locks in the counterparty. You have workflows that will require the necessary cryptographic approvals from either electronic systems or under certain cutoffs, operations people, compliance people, and so on. So you can basically bring your entire process and implement it in the product and in the technology. We've built integration with the best of breed companies around compliance in the space, such as Chainalysis, where we have native integration, right, that provides the automation of compliance operations for the people. And then so basically, the technology was really purposely built to meet this. And on top of that, we clearly invested over the last 5 years in having all the certifications. So right now, Fireblocks is probably the most certified provider in terms of, we have the different ISOs, we have SOC 2 Type 2. We were the first one and still one of the only two that are certified against what is called CCSS level 3 certification, which is the purpose-built certification for blockchain wallets. So all those things help. And then on top of that, we actually have our GRC team, basically our governance, risk, and compliance team, that a lot of the people we have over there are ex-central bank, right? So the person who is running it was basically was a manager in the Bank of Israel GRC team, that they know how we already have the expertise of, like, how do you take all that and and put it in a language and explanation that is both good for the internal risk committees and also is suitable for walking into a regulator and getting the approval. So that's like, how do we work internally? I would also say that we also working quite a lot with the different regulators to make sure that they are familiar with our technology, what it can be done, and definitely, like, remove a lot of the or doing a lot of the initial legwork for our clients in terms of making sure that the regulators are familiar with the base of the infrastructure.
Yeah, as I was telling you before the call, I mean, seeing the setup you guys have around security in your offices in Tel Aviv, it's extremely impressive and something I hadn't seen at even any of the financial institutions we visited. So kudos to you guys for building that out. Maybe shifting to Web3, which you had mentioned at the start. You talked about some of the use cases. What are the ones that get you most excited? And what makes you guys want to focus, on this emerging category in crypto?
Yeah, so I think that the overall narrative, right, of Web3, and I think Web3, there are different definitions that are, some of them are broader, some of them are narrower, some of them are just basically, some treat, some would define Web3 as just basically crypto 2.0, right? The way that we define Web3, just to be very specific, is that those are actually the non-financial applications of crypto rails, right? Which, generally speaking, go into domains of, and what I've seen, the areas where I've seen things quite exciting is the domains of gaming, right? Where I think that there is an opportunity to create new experiences in terms of virtual goods and, in-game economics that was proven already to be somewhat working. There are domains around marketing engagement, brand loyalty points, and so on that we've seen being experimented over the last 12 months or so. And then the third category is really where you see direct implications on the core business model of companies. So, for example, we have a client called TravelX. They are tokenizing airfare tickets, right? And that's just like, a very simple example that I think anyone can relate to, that currently when you buy a plane ticket, it's not transferable, and there is no way for you to do something with that ticket except of maybe going to the airline company and try to cancel or modify it, which always incurs, mostly incurs ridiculous fees, right? And one of the questions you sort of ask yourself, why can't I just give my ticket to someone else and they can board the flight and they can pay me for what I paid earlier, right? To have some secondary market over there. And they definitely were able, they're already working with one of the domestic airlines in Argentina, and I think they are now working on expanding globally. And the interesting thing is that when you combine that with smart contracts, they actually created an experience over there that when a secondary market transaction occurs and when you actually sell your airline ticket, the airline company, because it's all based on smart contracts and stable coins, the airline company is actually getting part, I think 5% or so from the secondary sell price, right? So the airline company is sort of benefiting from it. So from my standpoint, the way that I look at it is this is like a real transformation of an existing business model for companies that is available through those mechanisms, which was not available before. And I think in the ticket industry, I think you can see the continuation of that in some of the royalties that can be attached to content, creator economy, where you have podcasters, influencers, and so on, where they can actually own the IP and the future revenue stream from advertisement on their content. I think all those things are pretty exciting, and they do introduce business models that were unavailable before that. So if you're asking me what I'm actually most excited about, is probably the third category, where this is you meet companies over there and they blow your mind in terms of thinking big and thinking transformative. But definitely I also see a lot of value in the first two categories because they are more probably tangible in terms of what is being done today.
Totally. And I think at Ribbit, we have a similar view of what Web3 is. And I think the way we just look at financial services broadly is, financial services is enabling commerce, it's enabling applications, and crypto kind of needs some of those applications and needs that commerce layer of NFTs and other things happening. And I think Fireblocks being able to service that whole market is super, super exciting. Maybe on that point, though, when you look at financial services companies, often they focus on the risk, they focus on the security, they focus on, different aspects of a vendor. What are the unique needs maybe of companies that are building in the NFT space or the broader Web3 space? How is it different? How is it different from, the financial institutions that you guys serve?
Yeah, I mean, I think it really depends on kind of the subcategory in that sector. So generally speaking, what you see in the Web3 is that you both see established big brands, Fortune 500 companies coming in. And on the other hand, you basically see the startups with the two guys or two ladies and a dog in a garage, right? They are basically starting a new project. I think security is, generally speaking, very important for both, and the controls. Clearly, for the bigger brands, this is at this point like paramount, right? Because at the end of the day, while they are excited about the opportunity, they are also concerned about the reputational risk, right? So to lose control over the wallets, to have vulnerabilities, to be associated with a scam, not a scam, but like because usually they control the experience, but mostly around the fact that something will go wrong on a technical standpoint. This is like very important for them, and in that regard, I think that they are more akin to the same behavior that the bigger financial institutions exhibit. For the smaller guys, honestly, I think that the security is important, but what is really important for them at the moment is the ability to access something that is fairly affordable, just given like where the market is at the moment, and that can be provisioned and deployed very quickly. They do want to make sure that I think that they do want to make sure that they engage with a reputable vendor on those layers, because it does play an important role in their fundraising and in the visibility they're getting in the market. So, Fireblocks definitely plays a big role over there. And to be very transparent with the audience over here, we kind of started to really look into how to create specific tiers that will, from a packaging standpoint, where we will be able to engage in a cost-effective way with the smaller players in the market, and so far it actually looks pretty promising in terms of our ability to work with small players and support them and sort of like get them the infrastructure they need, and the flexibility. I mean, at the end of the day, I think we view Fireblocks the best, and definitely I think objectively one of the best wallet and technology providers in the space in terms of providing an infrastructure. And I think that it's very important for us to make sure that the next wave of scale-up companies in this space will rely on a secure infrastructure. Because if there is something that we can all learn from what this space exhibit back in 2019, is the fact that, or maybe 2020, 2021 as well, is that after the previous kind of crypto summer, crypto winter, right? You had also quite a lot of startups that were building products, and some of them decided to take, in the early days, some of them decided to take a path of building their own infrastructure or selecting infrastructure which was not enterprise grade. And overnight, they became very big. When you become big in this space, you become the target of nation state actors like the North Korean hackers and so on, and then you just basically blow up, right? Because you get hacked and you lose hundreds of millions of dollars. So I think it is important to put the right infrastructure from the get-go in those cases.
And at Fireblocks, you guys have always been at the cutting edge of technology with MPC and everything you guys have built out. What excites you maybe over the next few years on what's happening in crypto, what the changes and evolution of technology, and maybe what's going to impact your customers over the next few years as kind of crypto evolves and the tech evolves?
Yeah, so I think that there are kind of like a lot of moving parts that they need to simultaneously work together in terms of what are the new blockchains, what are the throughputs, right? What is the wallet technology that is actually able to support those use cases and throughputs, and what are the overarching mechanisms that are still missing to bring it to mass adoption, right? So I think that on the blockchain side of the house, we're definitely seeing some new blockchains that they have higher performance and more scalable performance, which are interesting, and they're putting new demand on how our wallet infrastructure is performing. And also there are new technologies like ZK rollups and so on. So in general, the way that we look at it is that there is still a significant innovation that needs to be pushed around the MPC technology. We just released a few months ago a new protocol that continues to improve the performance in terms of latency of MPC signing, which is critical for some of the new use cases around gaming, CBDC, payments, you name it, right? That you want to have sub-second signatures, whereas right now MPC protocols that are built properly, they're inherently a bit slower. We're closely monitoring account abstraction in terms of what is going to happen over there, and we've done some investments in that space as well. There's some maturity that needs to happen. And then I think and gasless transactions and all that kind of stuff, right? Which I think is important from a user experience standpoint. And the thing that we are probably very excited about is around what I call programmable compliance, which is required to take a lot of the exciting stuff and the applications that we're currently building and distribute them on chain to hundreds of millions or billions of retail users and meet regulatory requirements around illicit activity and consumer protection, and to do it in a way that is native to the technology. So kind of that layer is also a layer that we're currently heavily looking into, because as a player that works with all those institutions with the goal of bringing crypto and blockchain and Web3 into the masses in a secure way, we believe that there is no other path outside of figuring out, a regulatory technology that will be compliant and frictionless, right? So this is something that we are also looking into.
Awesome. Well, I know we have about 30 seconds left, so maybe if there's any closing advice or message you want to leave with folks.
Yeah. So I think that for all the folks that are listening to our conversation, I think that keep in mind that security is something that needs to be thought of initially when you're designing the system and when you are working on the architecture of the product, and not after the fact. And it's quite difficult to figure out when to re-platform. So this is something that I do want to leave with people in terms of how they're thinking about their project. And last but not least, if you need system advice, if you want to consult on the product trends in the market and how to enable your business, and from an infrastructure standpoint, feel free to reach out. It's fireblocks.com.
Thanks, everyone.
Zach, thanks so much for doing this. Fun.
Super fun.